Hello! Today I decided to make a special episode. You are in for unique format of a trading strategy. I'll show you how forex and stock market traders trade with minimal risk while maximizing their profits. You'll learn how the win-to-win strategy works. And of course, I'll explain how to apply this in binary options and share some cool hacks as always. Ready? Let's go! As I mentioned, the goal of the win-to-win strategy is to minimize risk and maximize profit as much as possible given those risks. For example, let's take the engulfing pattern. It's very simple and has a high percentage of profitable signals. On the chart, this pattern looks like this. First, there is a green candle. The next candle is a red, closing in the opposite direction. The idea of engulfing pattern is that the second candle completely engulfs the first one, including both the body and the shadows. The top of the second candle should be higher than the first one. This is the first mandatory condition for forming the pattern. The second condition is that the body of the subsequent candle should at least slightly cover the body of the previous one. If this condition is not met, the pattern is considered weak and should be ignored. The third condition is that the lower part of the first candle should be covered by the lower part of the second candle. If you see two candles on the screen that meet all three conditions, you have a perfect engulfing pattern. Let's move to the chart and see how traders make money with this. We will determine the point at which to enter the trade. The entry signal occurs when the second candle closes. If it was bearish, you enter a short position. If the second candle is bullish, you enter a long position. If the price for a forex trader goes in the wrong direction, a protective order, a stop loss, is set. When the price reaches it, the trade closes with minimal loss. The stop loss is set right behind the second engulfing candle. In this case, it is set slightly above the black candle. Now I'll see the risk for the trade. Here, it's only 1% and the take profit is set at a ratio of 1 to 3. Take profit is the target price that the trade must reach to close the profit. It is 3 times farther from the entry point than the stop loss. We won't go into more detail now, but I'll explain later how to apply this in binary options. Now please like this video and subscribe to the channel so you don't miss more interesting episodes. Enough talking, let's move to the practical part. Let's see how the strategy works during a trade. On this chart there is a great situation for going long. Before the pattern appeared, there was a downtrend in the currency pair. After that the engulfing pattern appeared, just as I described. At the point where the second candle ends, you can confidently enter a long position. We set the risk level at 1%, move the stop loss to the lower part of the second candle, and set the take profit 3 times farther from the entry point than the stop loss. Now let's see what happens on the chart. The price fell slightly before rising, but that doesn't mean it will continue down. It's important not to change the targets. We've already set the stops and takes, so there is nothing more to do. The price will do the rest. And here's the moment when the target is reached. The price hit the take profit area. Let's see the price goes next. Often the engulfing pattern yields more than a 1 to 3 ratio. The price keeps rising, not stopping. I moved the level where the currency pair could have hit the take profit several times, but the highs keep updating. Finally, the chart stabilized, and we can see how much more money this pattern could have made. Here, the take profit level reached a 1 to 10 ratio. That's why forex traders never fully close a trade at the first take profit. They close 50 to 75% of the trade and move to the stop loss to the break-even point. Let's look at another example of the engulfing pattern and proper risk management for a trade. This time for a short position, here the price on the chart is rising, and the peak of the rise. A bearish engulfing pattern appears, indicated an entry point for a sell. We open the trend at the close of the second candle and set the takes and stops according to our plan. The risk for the trade will be 1%, so if the price hits the stop loss, we will lose only 1% of the deposit. Again, we set the take profit 3 times farther than the stop. Now let's see how the price behaves after the engulfing pattern. Just a few candles later, our position hits the main target. We are already in profit. Now there are two options: exit the trade completely or leave 25% of the initial amount in the trade. Suppose we leave 25%. If we have done that, it would have been very profitable because the price dropped significantly by many points. The takeaway from this trading session is that you shouldn't rush, and it's crucial to manage your risk properly. Don't enter a trade with too large portion of your deposit. If your deposit is substantial, 1 to 2% is enough. If it's not very large, 5% is acceptable. This strategy works well not only in Forex market. I personally use successfully in binary options too. For binary options, you should enter for 1 to 3 candles. You can find examples of my trades using this strategy on options in the Telegram channel link below the video. Be sure to subscribe, especially if you are just starting out. There you'll find everything you need to enhance your trading skills, including personal support. I've shared the strategy with you, but to adapt it for binary options with low risk, you need a few hacks. Hack 1. Always keep an eye on important market events, and major news or economic data release can ruin even the best analysis and wreck a trade. It's better not to trade during these times except for certain strategies. You can track these events on the investing website Economic Calendar. This will help you avoid high volatility. Hack 2. Keep a trading journal. Record the time of entry, the instrument's name, the result, and the reason you entered. Trust me, when you start analyzing your trades at the end of the trading week, you will notice that many unsuccessful entries were due to the same reason. Fixing that will significantly increase your win rate. Hack 3. Choose only reliable trading pairs. We should include currencies of economically strong countries, like the US dollar, Australian dollar, Japanese yen, euro, and so on. These pairs don't usually have unexpected price spikes and are quite liquid, making their charts more predictable. Hack 4. Always use a demo account. If you are testing a new strategy, pattern, or indicator, try trading with a demo account for at least a day. This will help you understand if it suits you and how it works. But don't stay on demo accounts too long. Trading skills can dull due to the high level of safety. There are many more hacks in trading, and you can find many of them on my Telegram channel, which I highly recommend subscribing to. Now I'll discuss another important aspect to consider for minimizing your trading risk. Trading isn't just about technical knowledge and a refined strategy, you also need psychological resilience. During trading, you'll experience various emotions: fear, anger, excitement, anxiety, frustration, and euphoria. Any of these emotions can cloud your judgment and ruin your trading, so you need to manage them. First way to deal with overwhelming emotions is to strictly follow your trading plan. This includes your trade entry rules, your trading schedule, and your pre-trade preparations. Discipline helps cut out unnecessary emotions. Second way is redirection. If discipline fails and strong emotions surge during a trading session, redirect them elsewhere. Find the strength to turn off your trading terminal and do something to relieve that tension. Take a cool shower, go for a run, listen to loud music, or hit a punching bag. Anything that takes your mind off trading. You need to follow just a few things to ensure successful trading. Keep a trading journal and a trace with no more than 5% of your deposit. Stay disciplined and know how to redirect your emotions. I believe this is a small price to pay and effort to make for earning good money. For a good start, you just need to take action. So, take action and you'll definitely succeed. That's all for today. I was happy to share this useful information with you. Subscribe to this channel so you don't miss out anything interesting and like this video. I wish you success and hope all your trades are win-win. See you in the next episode.